Okay, so we're diving into bull markets this time.
Right.
And I gotta say, the name kind of makes me think of like actual bulls,
Yeah.
like running down Wall Street or something.
Laughs. Well, thankfully, no actual bulls involved.
Okay, good.
Though I guess a little excitement on Wall Street never hurts.
True, true.
But basically, when we talk about a bull market, we're talking about a time when stock prices are on the rise.
Makes sense.
Yeah, the ZenStocks blog we're looking at today, they define it as like this period where investors are feeling confident,
Mm.
and that leads to more buying, which pushes prices up even more.
So it's less about like angry animals and more about everyone just feeling good about the market.
Exactly. It's all about optimism, really.
Oh,
That
yeah.
businesses are doing well, investors are feeling good, and that all gets reflected in those rising stock prices.
Gotcha. But everything that goes up must come down, right? These bull markets, they don't just keep going forever.
You're absolutely right. That's the thing about bull markets. They kind of have this built-in expiration date.
Oh,
Yeah, the article calls it market euphoria.
euphoria. Okay, now that sounds a little dangerous.
Well, think of it this way. When things are going great, it's really easy to get caught up in the hype,
Right.
People get a little, well, euphoric,
Oh, I get it.
and they maybe start making decisions based on, let's say, enthusiasm rather than logic.
Kind of like when everyone was obsessed with those dot-com stocks back in the 90s.
Exactly. The dot-com bubble is like the textbook example of this.
I remember it vaguely.
Everyone was so sure that the internet was the future.
It was,
It was and is. But, I mean, back then, investors were throwing money at any company with a .com in its name, regardless of whether they actually had a solid business plan.
yeah, it seemed like everyone thought they were going to get rich quick. Did any of those companies actually make it?
A few did, but a lot of them crashed and burned.
Yeah.
Remember Pets.com? They had that sock puppet mascot.
Oh, yeah. With the microphone.
That's the one. They spent a ton on advertising, even had a Super Bowl commercial.
Wow.
But their whole business model just wasn't, well, sustainable. They went bankrupt in like 2 years.
Ouch. So even in a bull market, you're saying it's important to like not get carried away.
Exactly. And that's where those Zen stocks tips come in. It's
Yeah.
all about riding the wave of a bull market, enjoying the potential profits, but not getting totally wiped out when things inevitably change.
Right.
Because they always change, it's just a matter of time.
Right. So let's hear these tips. The first one is staying disciplined, which makes sense after that .com story.
Discipline is huge, especially when you see other people making quick profits and you're feeling that temptation to, you know, chase those returns.
Yeah, FOMO is real.
Tell me about it. But it's really crucial to stick to your investment plan, even when it feels like everyone else is breaking all the rules and winning.
Don't get blinded by the shiny objects, right?
Exactly. Now, the article also talks about this idea of dollar cost averaging as a way to, like, ride out those market ups and downs.
Okay, dollar cost averaging. I've heard that term thrown around, but to be honest, I'm not entirely sure what it means.
So imagine instead of trying to perfectly time the market, which is almost impossible,
Yeah, good luck with that.
right, you invest a set amount of money at regular intervals. So maybe it's $100 every week or $500 a month, whatever you're comfortable with. And you do this no matter what the market's doing.
So you're basically taking the emotion out of it.
In a way, yeah. You're not panicking when the market dips because you're not putting all your eggs in one basket.
And I'm guessing when the market goes up,
You benefit from that too.
best of both worlds.
Exactly. It's a long game, remember?
Right, right. The ZenStock article, they had this example
Oh, yeah.
about an investor who like consistently put money into an index fund every single month.
Smart.
Yeah, for like 20 years.
Wow, that's dedication.
I know, right? And get this, even with all the market crashes and dips and everything,
There were a few in there, yeah.
they still ended up with a pretty impressive nest egg.
C. Proof that slow and steady wins the race. Which brings us to our next ZenStocks gem.
Hit me with it.
Don't try to time the market.
Oh, that's tempting though, right?
Incredibly tempting. But trying to predict the absolute perfect time to buy or sell,
Risky.
it's like trying to catch lightning in a bottle. Even the pros get it wrong all the time.
So less crystal ball, like what? Just being chill about it.
Mindful investing. That's a good way to put it. The article stresses focusing on what you can control,
Which is.
your savings rate, how much you're putting in, your overall strategy, and importantly, how you react emotionally when the market goes crazy.
Because it will go crazy, won't it?
Oh, you bet. Now, one more tip from ZenStocks, and it's about rebalancing your portfolio.
Portfolio rebalancing, what is that, like financial feng shui?
Laughs. Not quite. Think of it like this. Imagine your different investments are like plants in a garden. Over time, some grow faster than others,
Right.
and if you let things get too out of whack, the whole garden suffers. Rebalancing is like pruning back the ones that got too big, giving the others room to thrive.
So it's about making sure your investments are still matching up with your goals.
Exactly. And your risk tolerance. That's key.
Okay, makes sense. And the last tip, I feel like there's always got to be one slightly scary one.
Well, it's not scary, but it's about being realistic. ZenStocks reminds us, even in a bull market, you have to be prepared for volatility.
Because even if things are generally going up,
There will be dips, corrections, those moments where it feels like the bottom's about to drop out.
so even in a bull market, buckle up, it's going to be a ride.
Think of it like you're sailing a ship.
Right.
You expect smooth sailing most of the time, but you also know storms can pop up. Having a plan helps you weather those storms without panicking and making rash decisions.
Okay, so basically, even when things seem good, got to be ready for anything, right?
Exactly, you got it. Being prepared, having a plan, that's the key to navigating those rough patches without making, emotional decisions that could hurt you in the long run.
Makes total sense. So say someone's listening to this, maybe they're new to all this, and they're thinking, hey, a bull market, sounds like a good time to jump in. What's like the main thing they should take away from all this?
I think the biggest thing is this. Bull markets, yeah, they can be amazing opportunities for growth, but you gotta go in with a clear head.
Not just get lost in all the excitement.
Exactly. Don't get swept up in the hype. Don't make rash decisions based on like FOMO or get-rich-quick schemes. Think long-term.
Basically, don't be that neighbor quitting their job to become day trader, right?
Precisely. Remember those Zen stock tips? Discipline, dollar cost averaging, rebalancing. It all comes back to making smart choices, not letting fear or greed call the shots.
Stay informed, stay disciplined. Remember, slow and steady often wins the race.
Couldn't say it better myself. And honestly, those principles, they're solid advice no matter what the market's doing, bull or bear or anything in between.
This has been a really insightful deep dive, I gotta say. I always find it amazing how much good info you can get from like just one well-written blog post.
Right, they packed a lot in there.
And speaking of good info, they also mentioned the whole psychology of money thing, which I gotta admit, that stuff really fascinates me.
Yeah, that's a whole other can of worms, isn't it?
Totally. Feels like a whole other deep dive waiting to happen.
Absolutely. How we think about money, it's so complex, and it can really affect our financial decisions without us even realizing it. Definitely worth exploring further.
I'm in. Count me in for that deep dive. Who knows, maybe by then we'll all be riding that bull market wave feeling like pros.
Haha, indeed. But until then, remember, knowledge is power, especially with investing.
I couldn't agree more. Thanks for joining us for this deep dive, everyone.
Thanks.
Until next time, happy investing.